Yo guys, it's your boy VGOK here with another video. What is good? I hope you're all doing amazing and are trading safely in the markets. Now, first things first, apologies for the late upload of this video. I was meaning to get it recorded, a couple of weeks ago when this trade was actually live, during that week. But I've actually been caught up with a lot of birthday celebrations and just enjoying life outside of lockdowns. So in this video, I'm going to be going over, yes, you've guessed it, another US30 trade breakdown. This trade was an intraday buy scenario executed in New York session on 15th of April. And on this trade, I personally closed this trade at a 1 to 16 risk to reward ratio. Also, I'd like to give a massive, massive thank you to all of my subscribers and all of the followers on Telegram as well. The support from you guys has been absolutely phenomenal, and I did not expect, my videos to be getting, this amount of views this early on in my YouTube sort of journey. So just here to show my appreciation and my thanks to you guys. So yeah, thank you. So here we have the actual before shot of the trade idea. Having my points of interest based upon, this first institutional candle here, and then finally entering the trade not until around that 2:30 p.m. time for the buy entries over here. And here we can see the lower time frame sort of screenshots for the before as prices reaching into our entry zone. And here we have the final after photo of the trade idea, having our entries down in here and having that lovely, lovely reaction to the upside, which is what we usually like to be looking for around that 230 volatility spike for US30. So jumping straight into the analysis, what we can see from the London session open time, which is at 8 a.m., we can see that as price starts to progress, what we can see is liquidity being formed on both sides. We both have sell side liquidity up here with these equal highs, and we also have the buy side liquidity down here in these equal lows. So what's actually happening in these areas is in areas of consolidation, this is where market makers actually like to jam up traders and create liquidity on both buy side and sell side. The market makers, they like to let the traders form their opinions, let the retail traders or these double top traders, these M patterns or this W pattern, however way you want to look at it, you've got traders on each side playing, entering at these equal lows with stops below, or they're entering off of these equal highs with stops slightly above. So they've got these two sort of positions in play. Then as we progress the price even further, we can actually see how the liquidity is actually manipulated. So as we see the price progressing, we can see that post London Open and pre New York Open, we can see the manipulation of the buy side liquidity and also a big break of structure to the upside, and this in turn creates our 10-minute sell to buy candle. We can see where the liquidity was run. We have liquidity on this bottom end here, and if we actually switch it down to a smaller time frame, we can actually see it a lot clearer on 5-minute as well. So let me delete these other positions, and we can actually see the sell side. We can see this candle here really dips down under this equal lows, under the liquidity, and then it's followed by a sharp movement in the opposite direction. Now, for me, on the 10-minute time frame, this is where it's given the cleanest, the cleanest looking candle that jumps down below the liquidity and then jumps above to break structure to the upside. And also, if we have a look on the previous price action, the last area of supply that was valid was off of this candle here. And we can see that the consolidation into this London Open, it was trading into this supply zone, and then this 10-minute candle broke that supply zone. So we were no longer looking to potentially sell this in this zone. We were then looking at the opposite bias and looking for buyers. So fast forwarding price a little bit more, you can see the creation of this 10-minute institutional candle, and this gives us our main point of interest. This gives us our main point of interest and our area of demand. So this is going to be our demand zone here within this candle. Now, after we've established our demand zone, our point of interest for our buy side off this 10-minute institutional candle, we then want to be looking at the lower time frame movements into this area. So jumping into the 1 minute time frame, and as we can see how price is actually moving into this zone, we can start to see the lower highs and the lower lows being created as it approaches our point of interest. So we have the high right there, followed by a low, we have a lower high, we have a lower high, followed by another lower low, and as price goes on, we can see it enter the demand zone there, and the creation of a further lower high here, and then another lower low into our demand zone there. As price goes on, seen it's come into the demand zone now, it's stalling around there, and there we have the positive reaction away from our initial demand zone. You know, we have the lower high, lower low, lower high, lower low, lower high, lower low. This is the last significant lower high that was broken. So this was the last significant lower high, and once this area has been broken above, that's a valid break of structure. So this was the significant one. After we have this valid break of structure, what we can actually see is on the 5 minute time frame is a creation of another institutional candle. You know, we have this last 5 minute sell to buy candle before the break of structure happened here. So that gives us our next point of interest for our buys of this 5 minute candle. Now, there's no need for us to actually go into a lower time frame once again to monitor this thing as it comes into it again. You know, we've had our proof that this previous demand zone here was valid because we have seen a break of structure to the upside. We have seen this break of structure to the upside, therefore this demand zone is confirmed to be valid, and then we can simply just have our entries, have our buy entries based off of this 5 minute open. So having the entry at the 5 minute open there, stops at the low right here. So we're looking at around an 8-point stop. And as we watch price progress, there we can see it's made another newer high, another new high in this uptrend. So then it's fully confirmed, you know. So in the higher time frame trend, we have this low, high, higher low, and then it's gone on to make a higher high. So naturally, we want to be looking for another higher low within this 5 minute institutional candle for our entries. So around this area sort of. And as we watch price progress, once again, there it comes into entry quite nicely there. Once, if you had set a limit in this area, chances are you may not have been executed. So what I've actually been doing recently on my US30 trades is placing these market execution trades, because we have our confirmed area where we know we can just start buying into this. And then also looking into the 1 minute time frame, what we can actually see in this area are the bases, the rally base rally formation, and the bases of that rally base rally that took this formation out. So we could have our entries in any area in between these two sort of lines, and they would be good to be having your entries. And as soon as price comes into this area, then we can look to just market execute and have our buy positions in. And as we see price go along, it comes into our area again, and then we see the 230 volatility pick up now, and there we go. We have that positive reaction, which is what we want to be looking for. Now, in terms of the TPs that I only had one TP on this. At the time of this trade, it was making all-time highs, so I didn't have any previous, structure or previous price action to base any TPs on. So what I did in this instance was I waited for that 230 volatility to, give its price action, give its movements, and show me, how strong this volatility was actually going to be. So as we forward price a bit longer, you can still see that it's going up. It made a high up to this point here. Now, one way that I like to use market geometry in setting my TPs is sort of the use of something called a measured move. Now, a measured move, we can see that this impulse was of this size, and we simply want to see an equal impulse again in the same direction. So wherever this next impulse comes to, I'm going to see it, and that it's bouncing off this area. As we forward the price, we can see this, and off it goes. So my final TP for this actual trade was at the top of this next measured move at that 1:16 risk to reward ratio. And as we forward the price, we can see it gets into this area quite nicely. Sorry, the size of the first measured move was this. So if we copy and paste the size of that move, that will give us our TP, which was up here, right there, giving us our 1:16 risk to reward ratio at 140 points for the TP. And as we forward the price, we can see it as price progresses. And eventually hitting our final TP up here. Now, just exiting out of the replay mode, what we can actually see, so scrolling back to the actual price of the movement last week, we can actually see, this buy scenario actually carried on for a lot longer. And me personally, I'm more of an intraday trader, so I don't really want to be holding my trades, and I've said this on a couple of videos before, I don't really like to hold my trades, overnight. In the end, this was a scenario where if I held my trade, I could have made a considerable amount more in terms of my reward. And this actually went up to a max of about a 1:43, which is absolutely phenomenal. But I actually closed my full trade off at this 1:16 risk to reward ratio. At the end of the day, I could have made a considerable amount more on this trade idea, but at the end of the day, I'm still learning, and I'm sharing my value, and I'm hoping you guys will learn alongside with me in my own trading experience as well. So that was the final breakdown of this US30 1:16 risk to reward trade idea, guys. And I'd finally like to just say thanks, and if you found value, if you found that you're learning things through these videos, please like, share, and subscribe, and I'll catch you guys in the next video.